Hello guys, good day. Welcome to another video lecture in ACC 221 Intermediate Accounting 3. I am your lecturer for this course, Sir Zhao, and in this particular video lecture, we will be discussing another component of your financial statements, which is your notes to financial statements. So the objective of our lecture for today is to know the purpose of the notes to financial statements and to identify the order of the presentation of the items to be reported into your notes to financial statements. All right. So, by the way, if you're new to my channel, please don't forget to hit the like button and subscribe my channel. All right. So, let's start. We have here the concept of statement or your notes to financial statement. So this item of your financial statement contain information in addition to that presented in the statement of financial position, income statement, statement of comprehensive income, statement of changes in equity, and cash flows. So, in other words, notes to financial statements are used to report information that does not fit in the body of statements in order to enhance the understandability of the statements. So as we all know, there are several information that is required by a user of a financial statement in order for them to be aided in making relevant decisions. So there are items which are not reported in other components of your financial statements quantitatively or qualitatively. So all of these information which are not disclosed in the face of the financial statements from the items like statement of financial position, comprehensive income, changes in equity, and cash flows will be reported sa atoang statement or notes to financial statements. So notes provides additional information and help clarify the items presented in the financial statements as the standard on the presentation of financial statement provides that an entity shall, as far as practicable, present notes in a systematic manner. All right. So each item in the face of the statement of financial position, income statement, statement of comprehensive income, statement of changes in equity, and statement of cash flows shall be cross-referenced to any related information in the notes. So later, guys, we will be discussing what are the contents of your notes to financial statements and how it could corroborate with the inputs that obviously is reported in your other financial statements. So the notes of financial statement shall be highly detailed, precise, complete, and easily understood by a reader who has a reasonable understanding of business affairs and is willing to study the financial statements. Okay? So again, as much as possible, the standard has provided that this FS should be understandable, no, to any user of a financial statement that is willing to study the financial statements. Okay? So generally the objective of your financial statement, guys, is to report other items which are material to be material to the users of the financial statement in order for them to really um, generate a more relevant decision based from the financial statements. All right. So the purpose of notes to financial statement is to provide the necessary disclosures required by the PFRS. Specifically, the standard PAS 1 paragraph 112 provides that the notes to the financial statements shall letter A, present information about the basis of preparation of the financial statements and the basic accounting policies used, meaning it is in the statement of it is in the notes to financial statements where the accountant will disclose on what are the standards which are used in the preparation of the financial statements. So obviously, in the Philippines, the preparation of the financial statements should be in accordance with PFRS. So in this case, the notes should explicitly disclose what are the standards, no, or specific accounting policies used that is used in, preparation of the financial statements. Letter B, disclose the information required by the PFRS that is not presented in the financial statement. So as mentioned, notes to financial statements will be disclosing to the users all those relevant informations which are not presented in other components of your financial statements. May it be quantitative or qualitative informations. And letter C, the purpose of your financial statement is to notes to financial statement is to provide additional information which is not presented in the financial statement but is relevant to an understanding of the financial statements. Okay, so let's proceed this time with the order of the presentation of the items to be reported in the notes. So there is a chronological arrangement of the disclosures to be presented into your note to financial statement. So paragraph 114 of PAS 1 presentation standards of your financial statements provides that an entity normally presents notes in the following order to assist users understand the financial statements and to compare them with financial statements of other entities. So there are four general components that is to be reported into your notes to financial statements, and they are reported into this chronological order. Number one is the statement of compliance with the PFRS. Number two, or letter B, summary of significant accounting policies that is used in the preparation of your financial statements. Letter C, supporting information or computation for line items presented in the financial statements. So for example, guys, as we all know that, let us say in your statement of financial position, we report items per line item. So that means we report different accounts in a lump basis. So for example, cash and cash equivalents. So in that line item alone, there are other accounts that is included in that one line item. So in this supporting information or computation for line items, so whatever is the component of that cash and cash equivalent, whatever is the details of that cash and cash equivalents will be reported in this component sa atuang notes to financial statements. So for example, your cash and cash equivalents includes an aggregate amount of 1 million, but as a user of the financial statement or a reader of a financial statement, we need to have a detailed information as to where that 1 million pesos coming from or what is the details of that 1 million. So in the notes to financial statement, we will report, for example, cash in bank 500,000, petty cash fund 200,000, revolving fund for 300,000. That makes it a million. So in that sense, the users of the financial statement will now have more information, detailed data as to what is presented sa inyuhang statement of financial position and other components of your financial statements. And letter D, other disclosures such as contingent liabilities, unrecognized contractual commitments, and non-financial disclosures. So again, these four should be chronologically arranged in order. Number one, statement of compliance with PFRS, followed by the summary of significant accounting policies used, and followed by supporting information or computation for line items presented in the financial statements, and lastly, other disclosures such as contingent liabilities, unrecognized contractual commitments, and non-financial disclosures. All right? Now, in some circumstances, it may be necessary or desirable to vary the order of specific items within the notes. However, the entity must retain systematic and structure of the notes as far as practicable. So where this order may not be followed, but it should always be considered by the preparers of the financial statements that these notes to financial statements should be prepared systematically. All right? But it is suggested since the standard has explicitly stated the order of the contents of your notes to financial statements, then therefore must um, might as well follow the order in the preparation of our notes to financial statements. But that does not actually hinder preparers to somehow deviate with that order of presenting the notes to financial statements, as long as it is presented systematically as far as practicable. All right. So let us discuss each of these notes that will be disclosed sa atoang notes to financial statements. So the first disclosure is the compliance with PFRS. So as we all know, guys, that the preparation of your financial statement should always be in accordance with the PFRS. So the first order or the first item that will really be disclosed into your notes to financial statements is really the explicit statement that the entity has followed the PFRS in preparing its financial statements. All right. So, Pass 1, paragraph 16 provides that an entity whose financial statements comply with PFRS shall make an explicit and unreserved statement of such compliance in the notes. So, again, if the entity has prepared their FS strictly in compliance with PFRS, so they would really state that, for example, ABC company has prepared their financial statements in accordance with PFRS, an explicit and unreserved statement of such compliance. An entity shall not describe financial statements as complying with PFRS unless they comply with all requirements of each applicable PFRS. All right? So it means that compliance with PFRS is compliance with every standards provided by this framework. All right? So it doesn't mean that you have just followed a particular standard um, by the PFRS, you may now um, considered compliant with PFRS. According to the standard, you are compliant with PFRS if all of the provisions of this framework are followed, no, are observed in the preparation of these financial statements. So the first item that will be disclosed really into your notes to financial statement is the statement of compliance with PFRS. All right. So the second one, guys, is the summary of significant accounting policies used. So obviously, no, there are several accounting policies that is used in the preparation of your financial statements. So accounting policies, these are the specific principles, methods, practices, rules, bases, and conventions adopted by the entity in preparing in presenting financial statements. So accounting standards set out the required recognition and measurement principles that an entity shall follow in preparing its financial statements and shall often prescribe the accounting policies to be adopted. So, for example, significant accounting policies used are the measurement basis. So, for example, whether the entity used historical cost, current cost, or whatever measurement basis that is used in preparation of your financial statement. So, for example, in accounting for the inventories, whether the entity has used weighted average method, first in, first out, or last in, first out. So that will be properly disclosed in under accounting policies. All right. So all other important items, including the measurement basis and the accounting policies, should be disclosed in the financial statements, which are again relevant to an understanding of your financial statement. All right. So let's proceed this time with the disclosure of measurement basis. So as what I have mentioned earlier, it is important for an entity to inform users of measurement basis used in the financial statements because the basis on which the entity prepares the financial statement is significantly affecting the user's analysis. So the measurement bases include historical cost, current cost, realizable value, or present value. But the most common measurement basis that is used in preparation of your financial statement is really on historical cost. So whatever measurement basis that is used by the entity, whether it's historical, current, or realizable value, or even present value, should properly be disclosed into your notes to financial statements, as well as what I have mentioned earlier, those accounting policies. So in deciding whether a particular accounting policy should be disclosed, management shall consider whether the disclosure would assess would assist users in understanding how transactions, other events, and conditions are reflected in the financial statements. So disclosures of accounting policies is especially useful to users when those policies are selected from alternatives allowed in Philippine financial reporting standards. All right. So again, for example, of the accounting policies are, let's say, the manner of depreciating your property, plant, and equipment, and all other depreciable assets, no, are required really to be reported into your financial statements. Okay, so pass one. Paragraph 122 provides that an entity shall disclose in the summary of significant accounting policies the judgments that management has made in the process of applying accounting policies and that have been significant effect in the amounts recognized in the financial statements. So specifically, management makes judgments in determining the following. For example, whether financial assets are to be measured at fair value or at amortized cost, or whether substantially all the significant risk and rewards of ownership of the leased asset are transferred to the lessee, or whether in substance particular sale of goods are product financing arrangement and therefore do not give rise to revenue. Okay? So these are considered as disclosure of judgments, which are also to be disclosed sa summary of significant accounting policies used in an entity. Alright? So another item to be disclosed is the disclosure of estimation warranty. So pass 1, paragraph 125 provides, guys, that an entity shall disclose information about the assumptions it makes about the future and major sources of uncertainty at the end of reporting period that have a significant risk of resulting in a material adjustment to the carrying amount of assets and liabilities within the next financial year. So with respect to those assets and liabilities, the notes shall include the nature and carrying amount of the assets and liabilities at the end of the reporting period. All right. So, very good example of this disclosure, um, of of this disclosure of estimation of uncertainty, guys, are, um, of course, the estimation of your contingent assets and your contingent liabilities. Okay. So, of course, lastly, no, the third, the of course, in the order, we have there the number one, your statement of clients with PFRS. Number two, summary of significant accounting policies. And number three, don't forget the supporting information or computation for line items presented in the financial statements. And lastly, your other disclosures. So other disclosures includes your contingent liabilities, unrecognized contractual commitments, and non-financial disclosures. So these four are really the important items that, um, what what includes to be reported into your notes to financial statements. Okay? So, importante na we should be aware of what are the items to be reported sa atuang notes to financial statements. So, we have here sample notes to financial statement, guys. So, again, we have the first note, no? Number one talaga in the order is the compliance with PFRS. For example, the explicit and unreserved statement of the compliance with PFRS can be worded in this manner, like the financial statements have been prepared in compliance with the Philippine Financial Reporting Standards and rules and regulations of the Philippine Securities and Exchange Commissions. All right? And the accounting policies adopted in the preparation of financial statements have been applied on a consistent basis. So, commonly, it is a uniform statement to all entities, no, complying with the PFRS in the presentation of their financial statements. All right, so that is note number one. Another note, guys, note number two is the summary of our significant accounting policies used. So example of this note are the measurement basis. So the financial statements have been prepared on the basis of historical cost. So there is an explicit statement as to the measurement basis. So in this case, for example, the FS was presented or was prepared based on historical cost, except where stated do not take into account changing prices and current cost of non-current assets. Also, example sa inventory. So, inventories are measured at lower of FIFO cost and net realizable value. So, LCFRV ang gamit ng inventory. Okay? Another significant accounting policy in terms of property, plant, and equipment. Property, plant, and equipment are recorded at cost. So, that means PPE and PPE components are recorded at cost. So the straight line method is used in recording depreciation on the basis of estimated useful life of the assets. So another guys is we have here, for example, note 3. So the third in the order is the supporting information or computation for line items, or let us say our inventory. So obviously guys, let us say you are preparing for your financial statements for the year ending December 31, 2019. So obviously, there is only a one line item presenting for your inventories. So your line item will only report inventories totaling 6.2 million. But this idea or this information might be somehow lacking in the eyes of our, users of FS or readers of FS without the detailed aggregate or detailed details of that 6.2 na aggregate na value. So that means it is important for us to report also the components of that 6.2 asa gikan ang 6.2. So that will also be reported sa notes to financial statements. All right? So for example, your 6.2 is coming from finished goods of 3 million, goods in process of 2 million, raw materials of 1.5, manufacturing supplies of 400, and there is actually an allowance for inventory write down of 700,000. That makes it 6.2 million. Take note guys, this is very important, no? In terms of, you know, considering um considering the amount of inventory level that is maintained by the entity. Okay? So that is also important. So that is the third order in the notes to financial statements. And lastly, guys, your last note is your other disclosures. Obviously, your other disclosures includes contingent liabilities, unrecognized contractual commitments, and non-financial disclosures. So for example, if there's a contingent liability, you should properly disclose it this way. So let's have an example. The entity is a defendant in a patent infringement suit seeking damages of 2 million. So we have a contingent liability here of 2 million. So the suit is still pending and the entity's legal counsel firmly believe that the case will not prosper. All right? So there is actually an information about that specific contingent liability, because take note, there is a contingent liability to be reported into your statement of financial position. But as to the probability of losing that lawsuit or winning that lawsuit will be stated in these notes to financial statements. So in this case, for example, the legal counsel of the entity firmly believes, sorry for the spelling, that the case will not prosper. So that means there is a tendency that in the next accounting period, the recorded contingent liability will be reversed because again the case is somehow believed not to prosper, or um, depending on the result of the cases. All right. So also it includes um, non-financial disclosures and contractual commitments. So in this case, it includes the bonds payable of 5 million will mature on December 31, 2022. It pays an annual interest of 12% on June 30 and December 31. And the bonds require sinking fund deposit of 1 million annually starting December 31 of 2019. All right? So these are the important disclosures, guys, that we need to remember and be familiar, of course, in preparing for our financial statements. All right? So again, those are the items necessary para sa ato, no, to remember in preparing for our financial statements. So again, question: what is the order of disclosure in the notes to financial statements? So I have identified four earlier. So again, to make sure that everyone is going through the lecture, please comment down in the comment section below the order of disclosures to be, of course, presented into your notes to financial statements. And let us know who are, again, among you guys, my students, can go up to this level of our video lecture. So I hope that we have considered and gained knowledge about the preparation of our notes to financial statements and the purpose of our financial statements. So if you have more questions, clarifications, and additional inputs, you may reserve that and present that during our virtual class. That's it for this lecture, guys. Thank you very much, and God bless us all.